What's going on? This is Marcus, and in today's video we're going to talk about why you definitely don't want to owe the IRS. They're the worst people they're the worst entity in the world that you could potentially owe, and you definitely don't want to go down that road. So I'm going to break this video up in 4 parts. First, I'm going to talk about when I had an IRS debt in my 20s. It was really annoying and ridiculous. Second, I'm going to talk about how I claim my deductions now and how it impacts my ability in 2021 to pay off debt a little bit sooner. Third, I'm going to talk about if you owe the IRS, why you shouldn't owe them, because some of the powers that they can do, such as freezing your assets and all the other creative methods they have to recoup what you owe. And finally, I'm going to talk about essentially 7 things that you could do if you actually owe the IRS. That part may be a little bit technical. I'll break it down in chapters, so if you're in the unfortunate position of owing the IRS, you can get straight to all the substance. Remember, I am an attorney. I'm not your attorney. So if you have an IRS debt, if you have to file bankruptcy, any of that type of stuff, please consult a competent attorney in your particular jurisdiction. Now that I got all of the disclaimers out the way, let's go into story times. So, fresh out of law school, I got my first job making about $40,000 a year. And because my income was $40,000 a year, I essentially got a lot of tax credits that you wouldn't get if you were in a higher tax bracket or made more money. And so I was able to claim all of my deductions, 2, sometimes I could claim 3, and because I got these additional tax credits because of the amount of my income wasn't substantially high, essentially I would always get a tax refund back of like, $2,000 or $3,000. So everything kind of worked out well. Well, fast forward 2.5, 3 years later, I get another job. I'm making substantially more money. And what do I not do? Stupid me, I don't change my actual tax deductions. So I have the government taking out the same amount of taxes as they were when I was making $40,000, and they're taking the same amount out now that I'm making substantially more than that. So I just go on, I'm enjoying myself because, at this time I'm making a little bit more money so I could pay off some of those debts, but I could also afford to get some of the things that I wanted to get. Not thinking about anything, and end of the year come, I go to file my taxes, and of course I do my taxes on my own because my thought is, hey man, I'm an attorney, I can figure out how to do taxes. I took one advanced tax, basic tax, corporate tax, partnership tax. Isn't that rocket science? So I'm doing my taxes and I get the final number and I'm like, what in the hell? So I'm thinking maybe I'm tripping. So I go onto the computer, I go into this computer program, I enter the numbers again, and when you hit enter, when you get a refund, the number will appear in green. When you owe money, it'll appear in red. And there it went, it appeared in red, and it was like $9,947 that I owed the government. And I was so upset. I literally hit enter on that computer probably like 6 times because I thought it was a mistake. I went back through and I was making sure that I did everything right to make sure, but no, it wasn't a mistake. I never changed my deductions, so I owed them money. And really how that works is everyone gets taxed at the same rate based on the same level of income. So you have person A and person B. From $0 to $20,000, they don't pay no taxes. From $20,000 to $40,000, they pay, let's say, 3% taxes. This is just an example. Now, person A, his income stops at $40,000. Person B, his income goes to $140,000. So, person A's income stopped at $40,000. He's paid his tax for his tax brackets. Well, person B has to pay a different tax rate based on his income over $40,000. So that's kind of how it worked. I never changed my adjustments. I made more money. Then at the end, I had a big bill that I had to account for. So it took me like, and this sucked because I wasn't too responsible with money at this time. So I had credit card bills and all sorts of crazy stuff. So it took me like 2.5 years to finally pay it off. And you just don't want to owe the IRS. They can make life for you pretty miserable. So you definitely don't want to owe them. Some of the things that they can do to recoup their money, they can garnish your wages, they can freeze your assets, they can put a lien, a levy against you, or put a lien in any property that you may own. So, for example, if you have a house and you owe the government $20,000 in back taxes, They could potentially put a lien on that house, so when you go to sell that house, any proceeds you recoup, the IRS gets their $20,000 first, and then anything else after that is what's yours. They can actually go through your employer and make adjustments to the deductions. Let's say you owe back taxes, they can mandate that your employer set your deductions to zero, so that way you can pay more in taxes so they can get the money that's owed to them. I mean, it could get real embarrassing and real creative how they can freeze your account and get their money back, so just don't even go down that road. I would actually advise, because the thing with the IRS, which makes them worse than credit card companies, not only do you accrue interest on your debt, but they also have civil penalties. I know I do that type of work all the time, and it's not the damages or what you owe that's the problem, it's the civil penalties that the government can tack on. So let's say you had a $10,000 bill and it accrues interest, but for every month that you're delayed, it could potentially be a penalty that's added on top of that. So the IRS is the last people you want to owe, and sometimes it may be advantageous to see if you could potentially borrow the money or do whatever you need to do to get them off your back first. Me personally, if I had to owe $10,000 to anyone, I would much rather owe $10,000 in credit card debt because it's unsecured, it's not attached to any property at the moment. I would much rather owe $10,000 in credit card debt as opposed to owing $10,000 at the IRS. So that's kind of how I got in my situation, which sucked completely. Well, I'll tell you, the result of that was me being completely shook. I'm shook now at the IRS. So no matter if I'm married, if I have 65 kids, I always put single zero dependents. Y'all take as much as y'all need right now so I don't have to worry about it. I was actually so shook, I put single zero, didn't claim any of my dependents, but I also gave them an extra $100 every 2 weeks just to make sure. So what that ended up resulting in, at the end of the year, I would get a huge tax refund back, like $10,000 back, because I never claimed any of my deductions. So I was actually paying too much in taxes now. Plus I was giving them a little extra because I was just so shook. Well, I stopped all of that in 2020 because there's a general rule, just from a mathematical standpoint, it's probably a bad idea to give the government an interest-free loan on money that's owed to you right now. So starting in 2021, this month, I'm actually claiming the proper deductions. So while claiming the proper deductions, I won't get a large tax refund at the end of the year. My household income will increase by, maybe $800 or so, which will put me in a better position to pay off debt or to potentially use some of that money to either invest or save. So, it was a good thing, but generally, I would err on the side of getting a large tax refund back. That's money that you can use to take care of stuff. That's money you can use to invest to make more money, or that's money that you can use to pay off debt and kind of beat the interest that's accruing on the debt that you may currently have. So that's kind of, just how that whole tax situation and me getting shook from the IRS affected how I claim deductions on my taxes. Now, here are the 7 things, and this is important. These are 7 things you can do if you actually owe the IRS. A lot of times people are like, oh man, I already know I'm going to owe the IRS. I may be have my own business, an LLC, and I have to pay taxes through that LLC, and I have to pay taxes on the wages I receive or that I pay myself. So some people just don't file. I think that's probably the worst thing that you can do. I wouldn't do it. I would advise me against doing it. I would actually always just go ahead, file on time, because not all the time is there going to be an extension. But again, like I said earlier, there's always penalties associated with everything when it comes to the IRS. Well, let's go ahead and jump into the 7 things that you can do if you owe the IRS money. The number 1 thing you can do is pay them. Again, if you can cut them a check for the balance, go ahead and pay them. If any type of late fees or interest has accrued, you may be able to get those abated. They may be able to wipe those out for you based on the type of negotiations. I'll tell you, with the IRS, the interest along with the penalties that they can stack on, I mean, that's a lot worse than credit card debt in most instances. Plus, they can put a lien on your property and all the other things I talked about in the previous segment. So, again, if you can afford to pay them, it actually may be worthwhile to see if you could potentially borrow the funds to pay them. I would much rather owe $10,000 on a credit card as opposed to owing $10,000 to the IRS. The credit card company can't put a lien on my property, and they could go through steps to put a lien on your property, but it'll be a long time coming. There's probably more of a likelihood that if I don't have the funds to pay the credit card back, I could work out a negotiation as pennies on the dollar, but that's just something you'll have to weigh based on your particular situation. But if you can cut them a check and pay them, definitely do that. The next thing you can do is called an installment. There's essentially 3 types of installments. The first installment is an automatic installment. If you owe $10,000 or less, you go online, pull out a form, fill this form out, submit it, and you set up an installment agreement based on that form that you filled out over a certain period of time to pay off that balance that you owe that's less than $10,000. The next installment agreement is called full pay. With full pay, this is where you owe more than $10,000 but less than $50,000. Now, at some point in time, Congress created this thing that's called the Fresh Start Initiative. What the Fresh Start Initiative was designed to do was to give people a fresh start. So it wanted to make it a little bit easier for people to pay back taxes owed so they don't get caught up in just kind of this debt circle of big debt being owed to the government. So with the Fresh Start Initiative, it expanded the period that you can do installment payments on any back taxes owed that is more than $10,000 or less, but less than $50,000. It used to be 60 months. Now you can do installment payments over a 72-month period. Remember, in order to get this type of installment, there does have to be analysis done just of your income versus what you have going out every month. The third type of installment is when you have a IRS debt that's over $50,000. There definitely has to be analysis done just of your income, what you have, your expenses, to see what disposable income you have at the end of the month. But those are really the 3 types of installment payments that you could get if you do have an IRS debt. The third thing that you can do is partial pay. Again, partial pay is exactly what it is. I'm going to make partial payments on this debt. There's an analysis that's done, again, on your income, but you could potentially owe $100,000, but if you only have $200 of disposable income at the end of the month, you'll only pay $200 towards that potential debt after you've taken care of all your other responsibilities and obligations. With this, a lot of times they'll do check-ins to see if your financial situation has changed, because they always want to recoup their money, and if your situation changed, the terms of that repayment may change. The number 4 thing that you can do is called the offer and compromise. And no, you can't just go to the IRS like, hey, I owe you 50 stacks, let me give you 5,000. Nah, it don't work like that. It has to be analysis, again, of income and expenses, and then based on that analysis, you may be able to work out a potential offer and compromise where, hey, I owe you 50,000, I have 35,000, this is what I'm going to pay you. And remember, none of these are mutually exclusive. You can have a combination of any of these things to satisfy whatever this tax debt may be that a person could potentially have. Number 5, it could go in not collectible status, and essentially that's exactly what it's called. You have 0 money at the end of the month, so your debt goes into a non-collectible status. They won't bother you. They'll probably send a bunch of correspondence to your house. They'll definitely do follow-ups and check-ins to make sure that, hey, your income situation hasn't changed. There may likely be, in this scenario, liens or levies against any personal property or real property that you own that they could attach their lien interest to. But if it's not collectible, if you don't have the funds, it could go in the not collectible status. It doesn't mean that it's went away. It just means that right now you're in a position where you can't make any payments, so they can't collect on the debt that's owed. The number 6 thing that can happen is bankruptcy. Now this could get a little complicated because not all tax debt is dischargeable through bankruptcy. So again, as I said earlier, you will definitely need to talk to an attorney, preferably one who's knowledgeable in bankruptcy, but is also knowledgeable in tax law, because the bankruptcy, depending on the situation, 7, 11, 13, it could be different types of bankruptcy. So this situation with bankruptcy, you definitely want to speak with an attorney. Speak with an attorney no matter what, but if you got a bankruptcy and a tax debt and it's just a tough financial situation, find an attorney out there who is competent in both areas. And the last thing you can do, and this is what most people do before they go see an attorney, is, can y'all guess? Absolutely nothing. You don't even file your taxes on time because you know you owe money. You don't make any arrangements. You don't call them. You ignore the call, hangs up. This is the worst thing to do. Always file your taxes, even if you owe, file them just so that it's not late, so you can avoid a bunch of penalties. But these are really all of the things that you could do and all the options you have if you have a tax debt. I hope no one has a tax debt, but it's tax season. People starting to get their W-2s and the 1099 employees and all of that type of thing. So I thought this would be a good video, but stay away from the IRS. Don't play with those guys. They are not about them games, so you definitely don't want no parts of that. I appreciate you all tuning in. Like, subscribe, comment. Take care. Peace.